Let's now quickly revise accounting standard 4, which talks about events occurring after balance sheet date. This is an exception to the concept of periodicity. What does accounting concept of periodicity say? Whatever transactions happens within the accounting period should come in that accounting period. Whatever transaction happens after accounting period should not come in this accounting period. It should come in next accounting period and next accounting period's financial statements. The exception is given in accounting standard 4. It says certain events which happens after the balance sheet date can also be included in this financial statement. But there are some conditions. First one, that event which is happening after balance sheet date cannot be an immaterial event. It should be significant event. However, such significant event can be favorable, can be unfavorable. We are not saying only favorable events will be adjusted. Any transaction that happens after balance sheet date, if it is significant, whether favorable or unfavorable, can be an event occurring after balance sheet date. Talking about the second condition, I told you that it happens after balance sheet date, but after balance sheet date, it should happen before financial statements are approved. Before financial statements are approved. Financial statements will be approved by the approving authority. In the case of limited liability partnership, it is designated partner. In the case of HUF, it is Karta. In the case of company, it is board of directors. So any event which is significant, whether favorable or unfavorable, happening after balance sheet date but before financial statements are approved, it is called as event occurring after balance sheet date. Not all the events occurring after balance sheet date are to be adjusted. Certain items, though it is event occurring after balance sheet date, though it is significant, it will still belong to next year. For it to be included in current year financial statement, in spite of it is happening after that, it has to fulfill two conditions. How many conditions? Two. What are they? Number one, condition should be existing on the balance sheet date. On 31st of March, when I am preparing financial statement, a condition relating to such event occurring after balance sheet date should be existing. Then we can record it completely here, no? What is it happening after? After the balance sheet date, we get additional evidence about the transaction which is already existing on the balance sheet date. For example, on the balance sheet date, we have created provision for bad debts against a customer who owes us money and is gone through deep depression because of some loss, because of earthquake, fire or something. So before 31st March, we have sold goods, is our debtor, he's incurred huge losses and we have created provision. So there is a condition existing. After the balance sheet date, that is after 31st March, before 31st of July when the financial statements are approved, what happened? He declared himself insolvent. So he declared himself insolvent after 31st March. It is a next year transaction. It should appear as a bad debt in the next year. But EOABD AS4 says on 31st of March, you know that he might become bad debt. You had created provision. After 31st March, you got additional evidence. You adjust it as on 31st of March. So we need to make adjustment. How? Will we book bad debts entry? No. We'll make provision for 100% of debtors. Bad debt entry will be passed later. Here we'll write P&L to provision. Later we'll write bad debt to provision. Are you getting it? Similarly, let's say the cashier has stolen the cash before 31st March. So the cash suspense is there as on 31st March. After 31st March, before 31st July or 30th June when the financial statements are approved, we got to know that the cash was stolen by cashier. So condition was existing on the balance sheet date. Event occurring after balance sheet date gave us additional evidence. So that cash stolen or defecated by cashier will not be booked as expense in next year. It will be booked as expense in this year in my P&L all by itself. Are you getting it? So if the event occurring after the balance sheet date is a significant event, whether favorable or unfavorable, if it is happening after balance sheet date but before financial statements are approved, it is an event occurring after balance sheet date. If the condition is existing on the balance sheet date and event occurring after balance sheet date gives additional evidence, then it has to be adjusted into current year financial statements. We will not wait to record it in next year. Got this? However, if the additional evidence comes after balance sheet date, if it is significant but not adjusting event, then what can we do? We can disclose it in our director's report. Another important point to be remembered is, let us say there is no condition existing in balance sheet date. Then it will not become adjusting event, no, because two conditions and both the conditions have to be fulfilled. If there is no condition existing on balance sheet date, only there is additional evidence or something happened after balance sheet date, it is actually not an adjusting event. It belongs to next financial year. But if the transaction or if that event what is happening after balance sheet date, it raises a question mark on the fundamental accounting assumption of going concern, then the financial statements have to be redrafted at fair value. Then that value will be recorded 0. For example, we have lost all our inventory on 15th of April because of a fire accident. It is an event occurring after balance sheet date because the fire accident happened on 15th April. Year ending is 31st March. Financial statements are approved on 31st of July. So it's happening between those two dates, event occurring after balance sheet date. As on 31st of March, did I know that fire will happen? If I would have known, I would have put fireproof jacket on that inventory. So I didn't know that the fire accident will happen. So it is an event occurring after balance sheet date, yes, but the conditions are not existing on balance sheet date. It will become non-adjusting event. So there is actually no need of adjustment. We should do only disclosure in board report. However, director's report. However, if all my inventory is burnt, there is no insurance policy also. This might lead to shutting down of my business. If they give such information like major fire accident, almost all the goods are burnt, there is no insurance claim. If they give information like this, then we need to check whether substratum of going concern, which is the fundamental accounting assumption, is it valid, needs to be checked. If the fundamental accounting assumption of going concern is valid, then no, not adjusting at all. Why? Event is occurring after balance sheet date. Condition is not existing on balance sheet date. No problem. Write it as loss in next year. However, if going concern is not there, our business might not see next balance sheet date. Then, though it is event occurring after balance sheet date, for which condition is not existing on balance sheet date, making it a non-adjusting event based on conditions, still we would have to redraft our entire financial statements because there is no going concern. We have to write all the assets at its fair value, disposable value, all the liabilities at its settlement value. When I am doing it, this inventory will become 0 rupees in my books. Why? Inventory is not there, no. So how can I have NRV of that inventory? 0. So it is like I am adjusting. That's what is told in accounting standard 4.